bring in Dhirendra Kumar, who's the CEO of Value Research. Dhirendra, I want to talk about distribution of mutual funds, because in a market like this, there'll be a lot of investors who now roll their chairs up to their laptops saying we should get in. But we've noticed of late the online route of sales of mutual funds haven't really picked up. They've not been able to tap into that internet banking segment. SEBI has been putting a lot of pressure on mutual funds. Why is it that online sales have not picked up yet? Why have we not been able to capitalize on it?
That is primarily because investing in mutual fund is cumbersome. It is not that you decide on a mutual fund, you go to their website, transfer the money and get going. Before you start investing in a mutual fund, there should be a KYC. Then understanding about mutual fund itself is very low. Then understanding about market-related investment is also low. So, investors tend to expect some kind of guaranteed return. Individual investors don't have comprehension. The awareness about equity-related investment or market-related investment where you don't get guaranteed return is very low. So, it requires hand-holding. It is very difficult for an investor to be self-motivated, the self-directed investor, to choose a fund, then go about getting his KYC done, then get going with his online investment. It is possible, but I think it is early days given the environment that we are in. And of course, the KYC and the mechanism of investing in mutual funds is also cumbersome.
Well, do you think that improving the online route of sales is the solution to increase participation right now in equity mutual funds? We know a lot of investors have stayed out of the market. And bringing them in through online, would that be a solution for the industry at this point?
Yes, I think it is a low-hanging fruit, because I would imagine that people living in cities because mutual fund is an excellent product, it is an excellent investment because of its low cost, because of its transparency, because of the choice it offers. So, and investors, who have access to online banking and have access to internet, they will be in a reasonable position to do the things which requires, which will help them get started, and in a fairly cost-effective way, and be in total control of their investment. It will eliminate the intermediary as well. So, from that standpoint, I think it is a possibility. It is a low-hanging fruit, and there should be a focus.
And Dhirendra, we know mutual funds have asked post offices around the country to be included as distributors of mutual funds. How likely is this to happen, and what sort of impact will have? We know that, of course, post offices used to sell mutual funds earlier, but they stopped. What is the likelihood of them coming back in as distributors?
This was there before the abolition of entry load. Post offices in India used to sell mutual funds before entry load was abolished. But after the abolition of entry load, the economics of selling mutual funds through post office disappeared. And post office will sell mutual fund or facilitate selling of mutual fund only if they are being incentivized or they are being compensated or remunerated. And it is an economically viable activity. My sense is that given that we have the mutual funds have become lower cost, and now they can only pay trail commission. So it has a revenue stream, but not of a kind which would excite a post office to get started. So mutual funds would like to sell. I really wonder post office will be interested in selling them.